Well, good afternoon, folks. It's Joe with you here on February 27th. It's Tuesday. Let's jump into a market roundup. I've got my 2 cents. You guys know the drill. Let's take responsibility for the trades I'm going to show you. I'm going to break down the markets and talk about any sort of meaningful news for the day. We didn't get much in the markets, kind of a little bit more of the same, back to bullishness and some consolidation so far this week. We'll break that down technically, and then we will share trades as always, like we do here as a community.
Disclaimer. This video was created for professional stock and option traders. Maverick Trading is a proprietary trading firm that employs professional traders around the world. Our traders trade firm capital and keep 70 to 80% of profits they generate. All trades and analysis in this video are for professional traders only. If you are interested in becoming a professional trader for Maverick, click the apply button in the video description. Let's break down what happened today.
Moving into the markets, let's just jump into at how we finished. Pretty much a flat day overall. A little bit more of a movement in the Russells as always, 1.39%. Oil had a little bit of a pop, currently at 1.21%. It didn't close there, but it's moved a little bit higher since I've been talking, or since I was building this class. But take a look at the Dow and the S&P and the Q. It's pretty much flat, and we're just right back up to the levels that we've been and kind of just pinned there. Let's go to the daily news, as I haven't seen much outside of the norm. Sentiment remains optimistic as the markets consolidate back up to recent highs. Had a little bit of a hiccup there, a little bit of worries or concern with that CPI number showing that inflation is still a problem. I've made mention about this many, many times, folks. If we have a growing economy, it's not a quote-unquote problem. Pretty much recovered towards the end of last week and have been right back up to highs. I'll get to the charts here in a second. So the U.S. economy remains strong, even as the idea of a rate cut diminishes. Sorry, I should have finished that. But yeah, a little bit of disappointment there, but you really can't get bearish in light of an expanding and strong economy. Let's jump straight into the chart here. This is the SPY. Take a look at the action on this thing. You could see that, well, I'll go ahead and do this area. This is the consolidation area. This is the, or I should say the high. We did have this high here towards the end, or I say the beginning of February. Then we had that CPI number, but it gapped down into a very convenient support level, didn't it? Right at the 20-day moving average there. Had a little bit of a kind of a round null there. This is kind of funny because if you take into consideration these two candles, we have actually what's referred to as an island gap between here and here. And the island I'm referring to is going to be, yes, folks, I'm going to draw another box right through here-ish area. So gap down, the CPI is bad. Oh, geez. I mean, inflation is still hot, excuse me, and the markets were expecting maybe some sort of a rate cut going into the first quarter, March, I should say, of this year. Didn't happen. We retraced it, came back down, and guess what, folks? Boom, we're right back up. Now, I really don't want to, I don't like to put things on one event, or I should say one stock, but we had NVIDIA, which is everybody's darling. It's a pretty good sizable market cap when it comes to the Qs themselves, or I should say tech in itself, the big leader in AI. And it came out really, really well. It did really well, projected higher, and it had a huge move to the upside. I'm not sure if this was the reason for the move higher. You know what? I don't have to say that. It was definitely a catalyst to kind of ignore the news, or I should say the disappointment when it comes to an increasing CPI or the reduction of the possibility of a rate cut. Keep in mind, folks, this is a strong economy with people spending money and people making money, and it is doing really well. So I'm not surprised that we're right back up here at all. But boy, kind of a really interesting push and pull. Let's jump straight over to those Qs and take a look at it because they're very, very similar. The moves were a little bit more tumultuous, if you will, all right, because the expectations for the rate cut kind of diminished, but then we did have a nice little round of profit taking, and we're actually kind of still seeing that. Even though we had this jump back up, we are back up to these highs and consolidating. There is a healthy amount of profit taking coming out of some of those high-flying tech stocks. We'll see if this continues, but understand that even profit taking coming out of there is really not going to change trend, so it's not a bearish opportunity at all. It's just a little bit of a hesitation, but overall, guys, we really haven't changed much when it comes to sentiment or the expectations of where we think these markets will go, especially Going into the sideways days that we've seen over the last little bit, this is exactly what you'd expect when it comes to the heat map. We've got not a lot of dark reds, not a lot of bright greens, but a whole lot of brown, right? A little bit of green, a little bit of black, or what do you want to call that, gray, a little bit of light red. So just more of a consolidation. Not a lot of people out there actively selling. There's not a lot of active buyers. It was interesting to see how much buying did come into these markets a few days ago in light of that NVIDIA news. And like I say, I don't want to put it all on one stock, but I do believe it was enough of a catalyst to put people back into buying into these markets that were worried about them failing because of the CPI or a hot inflation number. That is definitely not the case, at least where we are now. It's been super easy to have my outlook. It really hasn't given me any sort of worries past a +3 monthly outlook. +1 here on the weekly. I've had this go to +1 to 2 back and forth. I think that's about all I've moved this. I'm in a state of +1 here. You could go +2, and the reason being is because I just love high bases. I mean, here's a high base, and this was a scary high base. I'm going to call it scary because we had a little bit of a gap here. Here's a nice little kind of a high base, consolidated pullback. Another gap down, big red candle looking like it was going to fall apart. Nope. Here's a gap down. Hey, we're going to fall apart. Nope. That's why whenever you guys hear me tout or talk about some of these things on our classes, I really put a lot of emphasis on pivot points, support resistance levels. I don't care about gaps or big pop up or big drop down. Where's the price action? You can always follow the price action. Where did it stop? Where did it turn? How come it didn't break below, this the 20-day? How come it's not completely falling apart below the 50? How come the volume didn't shoot up when it broke down? Well, the answer's right in front of us. It's because the pattern's still holding true. A little bit of a kind of a scary area there, but hey, overall, we're still exactly where we were a week ago, 2 weeks ago, 3 weeks ago, 4 weeks ago. You guys can figure it out. All right, so I'm not going to change too much when it comes to my outlook. Of course, I won't. Let's get to some trades. A lot of these trades are the same. Well, actually, I switched up a few of them. I wanted to show you new trades. But remember, guys, keep looking at the trades that we go week to week to week with because they are still definitely feasible. I like Disney with a nice little bull pullback up in a range. I'll show it to you in a second. ABBV is a really strong stock. That whole sector, healthcare, is doing really well. PEP and COF sideways. I'm going to show you guys Capital One there, COF, because it has a possibility to break higher, so kind of sideways up. John Deere, Schlumberger, or I call it Schlumberger, one of my favorites, and AEM. We'll take a look at a bear as well. Let's jump first off into our bull. This is Disney. What I liked about this is good news, strong earnings, putting a ton of money back into their company, showing expansion growth. A lot of people that have invested and love this stock, they're buying into it. Okay, none of what I just said means crap. But if it does, maybe that'll help you when it comes to, hey, this is a bullish chart. It breaks out, huge move to the upside. Looks like it retested a support level, at least for this first area above the 108 mark here. A little bit of a hammer candle. Volume's kind of gotten a little bit quiet. Maybe everybody that's in it is in it, but they're comfortable. But I'm not seeing a lot of selling. But what I do like is, I'll use my arrow key here, is it pulled back to the support level of this gap in my box. And it looks like it might be kind of a bull pullback. So shooting up at the 112, 113 mark, kind of a vertical spread opportunity over the next week and a half, 2 weeks. Might be kind of fun on Disney. It's in the right place, and it seems to be doing pretty good so far. Let's jump to the sideways, and I should call this sideways to up. This is Capital One Financial. I just like the sector. The sector's been super strong. Financials have been kind of hot as late, for lack of a better term. Yeah, whatever. But here it is, consolidating. Playing a sideways to up move. This is a pretty volatile stock. You can see my box is pretty wide here at about 131 to 142. And it's about 137 there. So you could play, I don't know if I'd want to do a butterfly. I'd do something kind of sideways to up on this. Maybe 140, 134 area. Let's go tighter here. See what that looks like. Maybe on the shorter term, if your expectations are for, hey, the market might consolidate over the next week or so, or you could play something that could kind of give you a little bit of flexibility to the upside. You could do a broken wing butterfly, maybe 132, 137, 140. I'm just throwing these numbers out there. Or a vertical spread of 136, 145, or excuse me, 42, 43, somewhere up in this resistance area. Hey, there's plenty of things you could do, but sideways to up is where I would be concentrating on COF. I know I have it as sideways, but sometimes I like them multi-directional. This is deer, but take a look at, let's see if I can get some straight lines here. Take a look at the, the gap down that it had right through here, and then the pivot point that it had. Now, this pivot point is actually lower than where it was previously. I'm going to try to include October, the end of October here. So you can see that it's trying to roll over again, and this area will be a hesitation point for it if it is even going to continue to go move lower. You can see today it actually did come off of its low, so it did actually revisit this area and is kind of hesitant to roll. So not very aggressive to the downside, maybe something like maybe a credit spread or maybe even a vertical spread or diagonal. I would shoot for no more than this previous low that it set a few days, like 4 trading days ago. Then yeah, we could see this revisit that what do we want to call that? 354, 355 area, at least in the near term. So kind of a good trade to look at if you're looking for something sideways to bear in your portfolio. So overall, guys, we're not going to do too much. The markets are still consolidating. I haven't changed my outlook. Bulls are doing good. Bears are kind of just meandering around. Seeing a little bit of profits being taken off the top. We still are, even with this move back up. I do think there's going to be some profits to be taken out of maybe the tech sector. I don't think that changes for a while, but bearish, I don't think so. So the markets, I'm going to call it, they shaked off its first bearish test. I know it's a kind of a silly one because it's not bearish. It's kind of a disappointment. CPI coming hot shows that we're strong. It's kind of a double-edged sword there, but let's call it the first quote-unquote bearish test, which I truly think is just a opportunity to take profits. Fear was met with a bullish stimulant. NVIDIA could be the cause. That's whatever. You can write up to whatever caused it. But sentiment came in bullish really quickly. And that should tell you something about where these markets are. It sat bearish for a little bit, even with a gap down. And boy, it was met with a bunch of people who really wanted to buy. So we're still bullish. S&P Case-Shiller Home Price Index was higher, showing that home prices did increase. I believe, I don't know if that's 2 months back or 1 month back, but it is delayed. But we do have the PCE on Thursday. That's going to be an interesting one because that is one of the major gauges of inflation that the Fed watches. And I imagine it should be in line or slightly higher. I don't know if it's going to decrease in light of what I've seen in the CPI and the PPI. But we'll see where that goes. As always, check potential reports on earnings if you guys are going to make trades that you do not want to carry over earnings. Just make sure you double check it. But past that, guys, we really haven't changed our tune. A little bit of a push and pull over the last week or so, but we are still bullish. We are still moving higher, and this economy is still strong. Thank you for joining me, and we'll talk to you guys next time. Bye, folks.